Shifting gears a bit, on set now to discuss the outlook on hedge funds. We are joined by Giordana Mosseri, Managing Director, Hedge Fund Advisory at Clarity Capital. Thanks as ever for being with us.
Thank you for inviting me.
Well, with a number of asset classes now suffering, what's the outlook on hedge funds?
Yes, hedge funds are, as you know, they are investing in normal traditional markets, so they have natural exposure to equity, fixed income, commodities, currency, etc. The third quarter has been difficult for hedge fund too, as well as market, and mainly by the uncertainty in the U.S. market, interest rate rise, China's slowing economy, deflation, and of course slump of commodity prices. So a very, very tough environment, and so also hedge fund experienced one of the most difficult quarter since 2008. The good point is that despite the fact they lost performance during the third quarter, overall year to date they are making money, and so they are on average on the same level as broad indexes and as well equity and fixed income. So the asset class in general is performing, despite the fact it has been under pressure in the third quarter.
Well, what about all the volatility that we've seen in the markets? What impact does that have on hedge funds?
Usually speaking, hedge funds, they like volatility, especially because they have a long book and a short book. So the short book tend to make money when the volatility rise. So when there is a volatility, stock markets are going down, and hedge funds are making money from the short book. However, as we experience that markets are going up and down, it's very difficult for portfolio managers to accordingly manage the portfolio and assess the risk. So when there is a long-term volatility perspective, so hedge fund make more money, while when there's a lot of choppiness, hedge fund also experience some difficulties.
All right, well, going forward now, how are these hedge fund managers positioning their portfolios?
So, for example, October has been a spectacular month for equity and less so spectacular for hedge fund. Why? Because the exposure of the hedge fund manager is more to conservative type of sectors. So, for example, in October, materials, industrial, energy went very, very well, while hedge funds tend to be more conservative. They are more exposed to consumer discretionary and healthcare. So it tends to be more conservative in generally and risk control overall, because there is a lot of uncertainty today.
All right. Well, what is the case for investors to place their money here?
So again, in this kind of market environments, the best thing is to be liquid and to be very opportunistic and take opportunities both on the long side and the short side. So the hedge fund keeps being a very good opportunity for clients.
All right. Well, thank you for your insight. Very much appreciate it.
Thank you.